Hi, I am Dr. Subramaniam, currently working as Assistant Professor, School of Management, Annamachari University, Rajanpeta. I would like to explain about the accounting concepts and conventions. Before going to discuss the concepts and conventions, first I give a brief introduction about the accounting. So accounting is a language of business. Why I am mentioning accounting is a language of business? Because of man memory is very limited. He cannot control and he can store and remember all the transaction. That's why we need an accounting device. That accounting device is the financial accounting. So the accounting information provided to the different stakeholders from the organization. Different stakeholders are involved in the company activities that are the creditor holders, consumers, customers, researchers. These are all who are directly or indirectly involved in the company activities. The persons are called as the stakeholders. The persons or stakeholders are largely depend upon the accounting information. So that's why the accounting is a systematic recording of the financial transactions. It's like a storage of all the financial information where they take the places, whether they're buying or selling or discounting, whatever it may be there in the business, that are all they are recorded in systematically. That's called as the accounting. See, accounting was practices in thousands and years ago in India. So an accounting part is mainly Professor GLE is divided into bookkeeping. Another one is the accounting. Where bookkeeping is end, accounting will start. Where accounting is end, auditing will start. In this session, I am going to covering the important of the accounting concepts and the conventions. The accounting concepts are broadly given into 10 types that are the simply called as MC, broad PC. I will explain in detail one by one. M stand money measurement concept, C stand cost concept, again M stand matching concept, C stand consistent concept, B stand business entity concept, R stand realization concept, A stand accrual concept, D stand dual aspect concept, P stand periodical concept, G stand going concept. Now I will look into the one by one detail discussion one by one. The first one is money measurement concepts. See, in the all financial transactions or in the business transactions, we cannot record it. We cannot record it in terms of kilograms, liters. We record always in terms of money only, not equivalent value. That whenever the recording the transactions monetarily, that it gives the meaningful and uniform understanding. So do not record the transactions in terms of kilograms, liters, etc. Always the financial transactions are expressed in terms of money. Consider the business transactions in money and equivalent of the money only. Now coming to the second concept is cost concept. See, cost concept that refers to the all transactions are taken places and whatever the amount is they occurred for producing of the manufacturing of goods and services, that's called as a cost. Here cost concept telling about so that only consider the original value. Do not consider the market value. Why we not consider the market value? After they accumulated some depreciation, the asset value as the decreases. That's why we consider in the consideration of the original value. So in different costs are involved, that is the fixed cost, variable cost, semi-variable cost. That. What is fixed cost? Fixed cost is called nothing but unchanged cost. Variable cost is changed, varies from the person to person and place to place. Whenever the products are produced a number, increasing number, the variable cost also increases. So in that concept is cost is always considered whatever the actually amount is spent and occur by the manufacturer or the businessman, that amount only should be considered for the analysis purpose. Now coming to the next one, matching concept. So in this matching concept refers about the discussing about the how much of revenues is generated from the business, and same time how much of income is spent on the business. So matching means where the revenues and the expenses should be matched, like a BEP, where marginal cost and marginal revenue is equal to the equal, that particular point is called as the break-even point. Like in matching concepts are also, revenue should be matched with the equal to the expenses. So that's why at the end of the accounting is considered the both the appropriate the values are the considers. So that telling about the matching concept. And next one is consistency concept. Generally, this consistency is a concept as well as the conventions. The consistency means maintain the consistency, policies, procedures, and rules and regulations. From the initially up to the end of the accounting process, these same principles and these same policies should be adopted in the organization. This consistency means same kind of methodology, methods, policies, and procedures to be adopted. For that, this accounting concept telling to the users and telling about the different stakeholders to maintain how to maintain the and how to continue the policies and procedures. And next one important concept is business entity concept. So business entity concept means that refers to the, it means business is different, owner is different, company is different, owner is different. For example, I am Dr. Subramaniam, myself is different, my business is different. Don't record my personal transaction into the business. Business transactions don't consider into the my personal account. Whenever I am using my personal uses, that consider only as a drawings that are shown in the separate as an account, as a drawings account. Don't return the as a business transaction. That's why business is different and entity is different and person is the different. We cannot consider the both are the same. So business concept is implies that, but like this is a simple formula, that is the accounting equation. That accounting equation, that formula is capital plus equity is equal assets. Capital means both equity share capital, preference share capital. Debt means capital plus debt, capital plus equity is equal to the assets. And coming to the next concept is realization concept means. See, this is very important concept. Why this is very important concept means business transactions always taken the historically and already taken the places of the buying and selling of the goods also. That's why this realization concept, which is also known as historical concept. So realization means already it has happened. Transactions are happening. And why? What is the reason? What is the consequence for that transactions are taken? Why the sales are increases and why the sales are dropped for the last year? We can compare with the current year to the previous year, and we based on this we can forecasting the near future also. That is this in this context, this realization concept which help to the different party users. Next, coming to the accrual concepts. So accrual concept is nothing but the evidence concept. So why I am telling is the evidence concept. Every financial transaction with supporting with an authenticating document. Without the document, we cannot consider these are the business transaction with supporting an authenticating document in different forms. That may be in form of the vouchers, in form of the bills, checks, or in a negotiable instrument forms. So that's why business transaction, wherever they taken place, that with the transaction with suitable to the documentation, authentication document, that only we consider that are the business transaction. We cannot consider the non-economic activities. Only consider the economic activities. Non-economic activities are not considered as economic activities. So that tell about the whether which transactions are recorded in the realization concept. Next, very important concept in accounting is dual aspect concept. So this accounting concept refers, so where in the business transactions having two folds. Every business transaction having a two folds. One fold is the receiving concept. Another fold is a giving concept. The receiving concept is called as debit, and giving concept is called as a credit. So every business transactions, the debit amount is equivalent to the credit amount. So that's why whenever the ledgers are preparing, whenever the accounts are preparing, this dual aspect concept must be followed by whether the posting of accounts of information or by verifying of the accounts. The dual aspect concepts are the very important and essential. Give the priority for both debit transactions and the credit transactions. Next, coming to the periodically concept. So periodically concept, which is also known as accounting period concept. So this periodical concept is refers about the business transactions where we can start it, and business transaction where we can end. That means commencement of the business transactions, the date, and end of the business transaction. In generally, the business transactions which commence from 1st April of every year, the transactions are end the next year 31st March, the transaction. During these days, whatever the transactions are taken place, that are all are called as the financial transaction. So this period is called as the accounting period. That means commencement of business transaction from 1st April to the next year 31st March. This is called as accounting period. You can sometime the business transactions are maybe take the calendar years are also like start from 1st January to the end 31st December. But here an accounting period, but particularly the accounting financial period is started from 1st April of every year and end by the next year. The even auditors are also verify the accounting after the end of the financial year only. So this telling about the periodically concept. You can when you preparation of the any accounting, the profit and loss account, we are written on the heading end of the year for the profit and loss account for the end of the year 2024-2005. Why you are mentioned end of the year? The income and expenses are the closed for particular year only. Expenses and the incomes are do not carry forward the next year. Then settle the same year, and whatever the balance is there, that balance is carry forward the next year. But wherever we are preparing the balance sheet is not a accounting. It is not account. It is a statement. That's why its balance sheet is called as statement of affairs. That balance sheet is prepared a particular date. That's why you are mentioned balance sheet as on that date. So these assets and the liabilities are the assets are long, fixed assets are the carry forward. Fixed assets are the carrying the asset values. Current assets are the converting the cash values. So that's why we are mentioning in the balance sheet is shown in the balance sheet shown the left side in the liabilities and current liabilities, whereas in the right side is shown the assets and the investment, marketable securities, other securities. And coming to the last one is going concern concept. See, going concern concept means we cannot imagine or assume the lifetime of the business. The lifetime of business, it is indefinite. Why it is indefinite? We cannot estimate the life of how long the business will continue. So that's why it's indefinite. The period cannot be defined. That's why it's indefinite. but we are assuming business will continue forever. That's why some transactions are the continued and some transactions are the closed. So we can go through all these business concept. Main concepts are the going concern concept, dual aspects concept, money measurements concept. Each concept having a unique meaning and unique understanding. While preparation of the transactions or recording transaction, analyzing the transaction, or the classifying the transaction, wherever you go, these are as a rules and regulations. The accounting concepts are the rules and regulations, how to prepare the accounts and how to analyzing the financial information to identify the true and fair value of the financial information. For that, these accounting concepts are very useful to all the user, not only the accounting.